Hello all, good morning. See, so now we are starting with the customs class. For the students who are having still doubt like why GST is not continuing, let me explain you once again. This fast track classes, or fast track batch, I'm taking it in 2 tracks. Okay, so because we are having every day 2 sessions, I'm taking it in 2 tracks. There's a track 1 and there's a track 2. Okay, the track 1 is the evening session, track 2 is the morning session. Track 1 is the evening session and track 2 is the morning session. Okay, so in the track 1 evening sessions, we already had class 1 and class 2. Okay, in these two classes, we have completed the GST introduction chapter. Whereas in track 2, now this class is the first one. In class order, it is class 3. Okay, if at all you are watching recorded classes, not live mode, then you will not be facing any issues, because by that time the classes will be arranged in the order. You could start continuously GST, or even you could start customs also, if at all you are watching as recorded. But to the live students only, I want to give this clarity. Class 3, now we are starting with customs. Okay, and let me tell you the chapters we are covering in customs also in fast track batch. Okay, because you guys, the ones especially who have purchased recorded classes, after some time, like, you will be calling to the admin officers like why this part is not covered in the fast track, like that. Okay, understand? I already said, like, out of 128 marks, this fast track covers only 110 marks. Okay, the other 18 marks related content is not going to be covered in fast track batch. I am repeating it again and again. Our target is only to cover this 110 marks. So for that 18 marks, there will be so many other chapters. Okay, even though I said 110, it will go majority times, like it would be 115, like that only it would be the weightage. Okay, so the other part will be leaving outrightly in the fast track batch. Okay, so coming to here, customs. Customs, if you look at the chapter list, sir, let me show you the chapters list in customs. If you look at the chapters in customs, we are having customs introduction and types of duties, first chapter. Since we need to understand the basics of customs, we'll be discussing this first chapter. One second, sir. Okay. So if you look at this customs introduction and types of duties, yes, weightage wise it is less, but still terminology, import process, export process, types of duties, like, okay, that part is relevant only for exam, at least to understand better the customs valuation chapter. So we'll be discussing this customs intro and types of duties. And then customs valuation. Okay, there's a definitely a 7 marks question from customs valuation. Sometimes you need to know even the knowledge of types of duties. Sometimes only valuation part is also enough. So this will be covering. Okay, so this intro on duties, our time allocated is like 1.5 classes, 1.5 class. I mean 3 hours. And then customs valuation, it need another 2 classes. 2 classes. And then for baggage, okay, so together for the first 2 chapters, my target is like to give 4 classes. Okay, so here and there might be some differences. So to finish the customs intro and duties and customs valuation, we are having the target of 4 hours. Then we are having baggage. For baggage, again, 1 class is enough, will solve problems also. And duty drawback also will finish in 1 class only. Okay, not more than that. So here we are having 6 classes. And then warehousing, another half class. If any duty drawback pending part is also there, also will be covering in this particular class only for warehousing. And then for FTP, again another 2 classes will be dealing. 2 classes. So if you see for the customs and FTP together, 4, 5, 6, 7, 9 classes. We'll be taking 9 classes. So 9 into 2, around 18 hours being allocated for the customs and FTP part. Okay. So once these 9 classes are finished, then we'll be dealing with the other parts, like we'll be going with something like GST related returns chapter will start. Once returns we have finished, means like in 2 classes, then assessment and audit, appeals and revision. So those chapters we can cover in this particular morning session related track only. Okay. So you will not be having any problem with these customs. Okay. These 9 classes, if you are following morning session also, you can able to understand this part clearly. If you are only able to attend the evening session, then GST can be taken care. Okay. So now, without wasting time, let us okay. So this is about the customs introduction and types of duty. If you look at here, already I said, okay, this is a separate track, so I'm not mentioning that. To frame law, the power to frame law is given under the Constitution. The power to frame law is given under where? Constitution. So Constitution gives the power to frame laws under, okay, to any act, sir. It doesn't mean necessarily to be a taxation related act. It could be a taxation related or other than taxation related. To frame law, the power is given under Article 246, that also 7th schedule. Even though it's not mentioned here, Article 246, 7th schedule consists of 3 lists. What are those 3 lists? Union list, state list, concurrent list. Article 246, 7th schedule, it consists of 3 lists: union list, state list and concurrent list. Any matters which are mentioned in union list, on those matters central government has the power to frame laws. If any matter is mentioned under state list, then state government has the power to frame law. If any matter is mentioned in concurrent list, then both central and states are having the power to frame laws, matters on which both centrals and states can frame laws respectively. So Article 246. Okay. So customs is also a law. To frame this customs law, the power has to be given to the government. Okay. So now entry 83 of the 7th schedule of Article 346 of Constitution. Okay, so that also, sir, union list. Article 246 of Constitution, that also union list. I mean, from this union list, entry 83 gives the power to frame laws with related to customs. Customs is under the union list. I mean, the power to frame customs is with central government. Under union list, there will be so many matters. I mean, central government can frame laws on different matters. Okay, out of them, customs is also one particular item on which central government can frame laws. So that's why the entry number of customs is entry 83. Now you might be having a question, sir, I didn't remember any entry number for GST, sir. Why for GST there is no entry number? Please clearly understand. To introduce GST, GST is not introduced through Article 246. For introduction of GST, a new article is given, Article 246A, which is specifically for GST. Under Article 246A, only GST related will be there. So why there will be an entry number? If the Article 246A is separately for GST, but whereas 246 is for different matters. So that's why customs entry number is entry 83. Okay. So Customs Act was enabled by the Parliament. So when it was enacted by the Parliament in the year 1962. Okay. This entry number is important, sir. Entry 83 of the union list, 7th schedule of Article 246 gives the power to central government to frame laws with respect to customs. Now, whatever the customs we are discussing, this customs is not a single act. The customs we are discussing is not a single act. Customs we are discussing is of two acts. One is Customs Act 1962, and the next one is like Customs Tariff Act 1975. This Customs Act consists of provisions related to charge, collection, and then assessment. This Customs Act 1962 consists of provisions related to what? Charge, collection, and then assessment. Okay, so let me explain you much more further with respect to this charge, collection, and assessment. Sir, on what tax has to be levied? On what tax has to be levied? This is a question. When tax has to be levied? When tax has to be levied? And what is the value for levying tax? Value for levying tax. Okay, so these kind of questions. So on what tax has to be levied now? On good or service, on sale of good, supply of good, import, export, that is the point. When means when the situation arises, like on making supply, that also like time of supply, when the liability arises, and then on what value tax has to be levied. So all these questions are nothing but covered under the charge. Okay, all these provisions related will be covered under where? Customs Act 1962. Then tax is levied, right? If tax is charged, that means tax is levied. Once tax is levied, such a tax has to be paid. Once tax is levied, such a tax has to be paid. So how the tax has to be paid? Whether it is like, if you remember income tax can be paid like self-assessment basis, or else income tax can be paid on self-assessment basis, or income tax can be paid as like advance tax, TDS. So the tax collection will have so many options. You can pay in installments in Customs Act, or else you can pay on self-assessment only, or you have the option to defer the tax payment. So all these options are nothing but related to tax collection. And then the last part is related to assessment. Assessment na, when you calculate tax and paid on your own, whether the calculation you did is correct or incorrect. So to verify all those, whether the calculation you did is correct or incorrect, to verify all those, assessment will be carried out. Okay, assessment, reassessment, best judgment assessment, those kind of. It's not only customs. Every act will consist of, taxation related act will consist of provisions related to charge, collection, and assessment. The basic body related to when the tax has to be levied, how the tax has to be levied, What are the situations that may lead to payment of customs duty, how such a tax has to be collected, and how such a tax will be assessed. So to covering all these provisions, Customs Act will be there. Okay, so if everything covers Customs Act only, then what is the purpose of Customs Tariff Act? What is the purpose of Customs Tariff Act? Tariff Act consists of two schedules. What are those? First schedule and second schedule. So important, sir. Customs is not a single act. Under customs there are two acts. One is Customs Act 1962 and the other one is Customs Tariff Act 1975. Under the Tariff Act there are two schedules. First schedule consists of import duties, whereas second schedule consists of export duties. First schedule consists of import duties and second schedule consists of export duties. Hello, are you able to understand? Then let us discuss the definition of India. What is meant by India? Let us discuss the definition of import. What is import? Import means bringing goods from outside India to India. Import means what? Bringing goods from outside India to India. Okay, so from Australia, if the goods are brought to India, then this is an import. From USA to India, import. From Sri Lanka to India, import. From bringing goods from outside India to India is called as import. Sir, why only goods is mentioned? Why they are not discussing about service? Because Customs Act is applicable only for goods. GST Act is applicable for both goods and services, whereas Customs Act is applicable only for what? Goods. Okay, so import means bringing goods from outside India to India. Then export. Export means sending goods from India to outside India. Export means what? Sending goods from India to outside India. Means sending goods from India to outside India. Export means sending goods from India to outside India. That means from India to UK, to USA, to Japan. Like this, if any goods are sent, then that is called as what? Export. Import means bringing goods from outside India to India. Export means sending goods from India to outside India. Okay? Now, definition of India. India means 28 states and 8 union territories. India means 28 states and 8 union territories. India includes its territorial waters also. India includes its territorial waters, which extends up to 12 nautical miles from baseline. 28 states and 8 union territories. India even includes its territorial waters, which extends from 12 nautical miles from the baseline. India even includes its customs waters. India even includes its customs waters. Customs waters means it includes exclusive economic zone. Till exclusive economic zones, Indian customs waters will be extending. So, Indian customs waters extends up to 200 nautical miles from baseline. So, Indian territorial waters extends up to 12 nautical miles, whereas Indian customs waters extends up to 200 nautical miles. Sir, important sir for MCQs, these 2 points. Indian territorial waters extends up to 12 nautical miles, whereas customs waters extends up to 200 nautical miles. Beyond 200 nautical miles, the sea will not end by 200 nautical miles, right? The sea will be there even after 200 nautical miles. The waters lie after 200 nautical miles are called as international waters, and that is called as high seas. High seas. If it is high seas, every government or every country will have equal rights. Okay? Then we are moving forward to the definition of goods. We are moving forward to what? The definition of goods. Goods includes vessels, aircrafts and vehicles. Sir, if at all from inter level also you might remember the basic definition of goods from GST. Goods means every kind of movable property. That's what mentioned in GST. Every kind of movable property. Here they are not saying it's like movable property. They are starting with the definition of includes. Okay, but if you look at the last sentence, here also they are saying like any other kind of movable property. First, they are mentioning certain names. Okay, but you cannot mention every name of good. Okay, there are so many goods within this room only. I can see like there are some 25 to 30 goods. Okay, 25 to 30 goods within the classroom from where I am taking classes. Okay, even if you see from the place where you are listening to classes, you will find out easily 20 to 25 goods around you. So can we list out all those under the definition? No, right? So they have given certain important ones which they think may be misunderstood and may not be treated as goods. That's why to give specific importance to them, certain items has been mentioned as goods. The others also goods only, even though not specifically mentioned, they will be covered under any other kind of movable property. So now see, goods includes vessels. Vessels means what? These ships, boats. So those are vessels. Aircrafts and vehicles. Goods includes vessels, aircrafts and vehicles. Then stores. What are the stores? Stores means the consumables which are used in a ship. Consumables. That means it could be fuel, spare parts. Those are called as stores. And then baggage. Baggage is nothing but the luggage. Baggage is nothing but the luggage. And then currency and any other negotiable instruments. Currency and any other negotiable instrument. So goods means vessels, aircrafts and vehicles. Aircrafts na these helicopters, okay, private jets, all these things. And then vehicles, they could be cars, bikes, those things. And then stores. Stores now the fuel, spare parts which would be used in a ship or aircraft. And the next one, baggage. Baggage means the luggage which will be carried by the passenger along with him. And the fourth one is like currency and negotiable instruments. Okay, the money they are carrying, the promissory notes, stamps, okay, those will come under the negotiable instruments. And any other kind of movable property. So again, once again I am repeating, sir, goods include vessels, aircraft, vessels. And then stores. Stores means what? The consumables like fuel, spare parts used in a vessel. And then baggage. What does it mean by baggage? Baggage means the luggage which will be carried by a passenger along with him or without him also. If any luggage is being sent, that is called as baggage. And then currency and other negotiable instruments also goods. Sir, here you might be having a question. Sir, why currency is also included in the definition of goods? If currency is included in the definition of goods, does on currency value also GST will be levied? No. Sorry, currency value also customs duty will be levied? No. But then why currency also included in the definition of customs? They want to have a track of how much currency you are carrying while going to foreign country and how much currency you are bringing. Otherwise, if there is no this kind of tracking, you will do hawala and all very easily. Okay? Okay, you will just go to foreign country and from there you will bring whatever the money you want in bags. Okay? So to have a track of how much currency you are taking with you and bringing with you, they are included these 2 points also in the definition. So includes vessels, aircrafts and vehicles. Stores. Stores means fuels and spare parts used in a vessel. And then baggage. Baggage even includes luggage. Then currency and other negotiable instruments and any other kind of movable property. Then case law. What is the case law? This case law. This case law is about Associated Cement Company Limited. Associated Cement Companies Limited. Okay, what is the case means? Sir, here there will be a cement factory, sir. This cement factory, like they want to install their plant and machinery, they want to construct their plant. To construct the plant, they need designs. So from a foreign country, they have asked for the designs of the construction of their cement factory. So that person made a design like where a particular factory, machine has to be installed, then the other machines, how these machines will be connected. All these designs he have drawn on a chart. He has drawn on a chart, and that particular chart has been sent to India through courier. That chart has been sent to India through courier. Whereas for that, for providing such designing thing, he has charged somewhere like around, assume like some 20 lakhs he has charged. Now, customs authorities are saying like that design is also a good. Whereas SSC is arguing like how can it be called as goods? Because these designs are intangibles. These are intellectual properties. These are intangibles. So we cannot call them as goods. So that's the dispute between the department and the taxpayer. So then the issue went to Commissioner of Appeals, then tribunal to High Court, and finally it went to Supreme Court. Then Supreme Court has decided it like what? Technical advisors, information technology. Technical advisors, these kind of designing services and all, and information technology services are intangibles only. Supreme Court also agreeing like intangibles only. But the moment they are put into a media, they are kept into a media, that means that design, when they were kept on a paper or into a CD or into a floppy disk, okay, or into a pen drive, hard disk, okay, so if they were kept into a media, they become movable. So even though intangible, but once they kept onto a physical, tangible media, like a paper or can be a hard disk, pen drive. Previously there used to be CDs and even floppy disk also. So when they kept into such kind of media, they become movable. Thus they will be goods only. Okay, if at all such kind of interior decoration, such kind of designing service, he was designed and such a design was sent through a mail. The scanned copy of such design is sent through a mail from foreign country to India. Then there is no tangible good involved. So that's why it is not called as good. But if it is physically sent through a courier, since there is some tangible good involved, it can be called as what? Goods. Then coastal goods. You need to understand what are called as or what is called as coastal goods. Coastal goods. So if you see this India, this is India, and this side there is Chennai, and here it is Mumbai. So now goods are starting from Chennai in a vessel and they go to Mumbai in a vessel. But in the meanwhile, during the process of this transportation from Chennai to Mumbai, the ship leaves India and again come back to India. So when ship is leaving India and coming to India, even goods in this particular vessel also leaving India, sent from India to outside India and again brought goods from outside India to India. So in this case, there is an export when the goods were sent from Chennai. And again when they are brought to Mumbai, they were coming from outside India, so there is an import also. So do we need to levy export duties and import duties on these goods? No. These goods are called as what? Coastal goods. Goods, these are other than imported goods, transported in a vessel from one port in India to another. These are just transported from one port in India to another. So these need not to be treated as like imported goods. On these goods, okay, on these goods, there will not be any customs duty. Hello, are you able to understand? Okay. So now we'll be discussing about assessment. This word assessment. What does it mean by assessment? Assessment means determination of dutability. What does it mean by assessment? Determination of dutability. So dutability means you feel little, it's not easy to process for our brain. If we replace it with the word taxability, duty and tax are more or less same. Okay, they are synonyms kind of only. So assessment means determination of taxability. I mean what? Whether such good is taxable or not, you need to find out. That's the first step of assessment. You need to find out whether the goods are taxable or not. Instead of taxable only, we are using the word what? Dutability. So first you will be finding out whether the goods are dutable or not. Okay, they are dutable, they are taxable. Okay, taxability of goods. Once you find out like they are taxable, then find out the amount of duty, tax, cess, fee, interest or any other amount so payable. Okay, what is called assessment, sir? Assessment means two parts. First part, find out whether they are taxable or not. Yes, they are taxable. If they are taxable, find out the tax, duty, cess, fee, interest or any other sum so payable. That is called assessment. Very simple, right? Assessment means finding out. Okay, let's say I have imported this particular water bottle. Assessment means what? Find out whether this particular good is dutable or not. I mean taxable or not. Okay, it is dutable. If it is dutable, what is the amount of duty, tax, cess, fee, interest or any other amount payable? Okay, but while doing such calculation, you need to consider the following. First one is what? Tariff classification you need to consider. What? Tariff classification. For us to understand tariff classification, sir, I already said Customs Tariff Act. Tariff Act consists of two schedules. First schedule consists of import duties, whereas second schedule consists of export duties. So, for you to understand, tariff means rates. Tariff means what? Rates. Tariff means rates. Okay. So these rates will be there on a particular good. What rate has to be applied? Such rate will be there only in that tariff classification. That's why assessment means what? Finding out taxable or not and calculating the tax amount. To calculate tax amount, you need tax rate, right? Where can you find tax rate? You can find the tax rate only in the tariff classification. So that's why you need to know tariff classification. See, this is the format of tariff classification, how it would be. Okay, the first column you will find out tariff item. I mean, for every good there is a code given. For every good, okay, whether it is a stapler like this or a mouse like this or a remote like this or a charger, cable, tab, TV, okay, lamps, okay, the LED lights, fans, benches, for everything there is a HSN code which is 8 digits, okay. So there will be 8-digit code and here there will be description of such good and then units of measurement, how that particular good will be measured. Okay, so if you look at paddy, we'll measure in quintals, whereas rice we are measuring in kgs, oil will measure in liters, whereas cloth will measure in meters, whereas gold will measure in grams. Okay, so like that, for every particular item there is a different units of measurement, and then there will be BCD rate here and there is a preferential rate also. What is BCD rate? What is called preferential rate? Sir, BCD rate is the actual customs duty rate, which we even call it as the standard rate also. This we even call it as what? Standard rate. This rate only usually I asked you to check. But there is something called preferential rate also. There is something called what? Preferential rate also. When this preferential rate is applicable, when the goods are coming from a preferential country, okay, let's say India has this preferential kind of allies with foreign countries, like let's say with Australia. India had a preferential trade agreement. So due to that, Australia will become our preferential country. So when the goods are coming from Australia, then instead of BCD rate, we'll levy preferential rate. That means if BCD is 12%, preferential may be only 8%. For the goods coming from other countries, we'll levy 12%. But the goods coming from preferential area will levy only 8%. So to know what tax rate has to be levied, we need to know what? Tariff classification. So while doing assessment, you should give importance to the tariff classification. Then value of such goods. Why value is needed? Because based on value only we can levy tax. Okay, let's say 12% is the tax. On what such 12% will be applied? On value only, right? So that's why value is important. Then if any exemption or concession available, if any exemption or concession available for such goods, such exemption and concession also has to give effect. Okay, by giving such exemption or concession, the value will get reduced, the taxability will also get reduced. And then you need to know about the quantity, volume, and even the measurement. You need to know quantity, volume, measurement. Now the question is, sir, why this quantity, volume also needed? Value is there na, to levy tax. Why again quantity is needed? Sir, understand. Under customs, to levy tax, there are two models of taxation. There are two models of taxation. Two models. The first model is like you take value. The first model is like you take value. On this value, a percentage of duty will be applied. This is the most regular and usual one which we see. This is called as even ad valorem duty. If it is levied like this way, value into percentage, then that is called as ad valorem duty. Whereas the other model is like not value based. It's linked to quantity, weight, volume and measurement. Let's say, for example, crude oil. In India, we'll be importing crude oil, right? So crude oil, the customs duty will be like, for 1 liter, it is 12 rupees. Per 1 liter, 12 rupees, like that. How many liters being imported, that many 12 rupees will be coming to government as customs duty. So here, it's based on what? Volume. How many liters you are being imported will determines the value. And even cigarettes, the other example is like cigarettes. On import of cigarettes also customs duty will be levied. How it will be levied? It is levied based on the measurement. I mean length of the cigarette will be the criteria to levy customs duty. Length of the cigarette. If it is a lengthy cigarette, then the customs duty will be higher. If it is a shorter one, then the customs duty will be less. So the customs duty levy, for the levy of customs duty, what? This measurement volume can also be a base. That's why, okay, for certain goods, okay, it's not for every good, these are only the parameters. For certain goods, these will be the parameters. That's why these are also needed. And the last one is like origin of such goods also needed. Why origin is needed, sir? I already said. If the goods are originating from preferential area, then instead of standard BCD rate, we'll be applying what? Preferential rate. That's why origin of those goods also needed to decide whether normal standard rate has to be applied or preferential rate has to be applied. So with this, we are done with the assessment definition. So quickly we'll summarize assessment means. Assessment means determination of dutability. I mean finding out whether the goods are dutable or not. Determination of dutability of goods, and then finding out and then determining the amount of duty, tax, interest, duty, tax, interest, cess, fee or any other amount payable. But while doing that, you should consider 5 items or 5 points. What are those? Tariff classification. Because tariff classification only you can find out the tax rates. Second one, value of such goods, because the tax rate can be applied only on value. Third one, if any exemption and concession is available, you need to give impact to such exemption or concession. And the fourth one is like quantity, volume and measurement is also needed. Based on quantity, volume, measurement only we can levy tax. And the last one is like origin of such goods. Origin also needed. Based on origin only we can decide whether preferential rate or the normal rate. So this is called assessment. Hello, are you able to understand? Right, are you able to understand, right? Is it clear? Is it clear? Okay, now Bill of export. What does it mean by bill of export? Bill of export means the form presented to proper officer. Bill of export is nothing but the form you present to proper officer. You want to export your goods. Okay, you cannot do export on your own, right? You should take permission to export your goods. So to export your goods, you need to tell at least what are the goods you are being sending them, what is their value, whether tax is applicable on them. To find out that, you need to present a form to the proper officer to allow or to let your goods to export. So to let your goods export, the form you present to proper officer is called as bill of export. To let your goods export, the form you present to proper officer is called as bill of export. Okay, form presented to proper officer to let the goods export is called bill of export. Then bill of entry, the next one is what? Bill of entry. What is called bill of entry? Bill of entry is also a form submitted to the proper officer, that time to let the goods export. But now it's the form submitted to let the imported goods cleared. I mean, to allow you to take your goods along with you, to let the imported goods cleared is called as bill of entry. To take your imported goods along with you, okay, you need to file bill of entry. You need to file what? Bill of entry. So bill of export is the form presented. Okay, sir, bill of export will be filed when the goods are being exported through like road. When the goods are being exported through road or land route, sir, either railways or roadways, land route, then it is bill of export. Whereas if the goods are being exported through aircraft or vessel, then that is called as shipping bill. When the goods are exported through aircraft or vessel, then that is called as shipping bill. Okay, then bill of entry is common whether you import through aircraft or vessel or whether you import through land route. Anyway, it is bill of entry only. But whereas bill of export, you call it as bill of export only when the goods are being exported through land route. You call it as shipping bill when the goods are being exported through aircraft or vessel, right? Okay, now we are moving towards the procedure for import. Procedure for import. Sir, first we need to understand clearly the procedure for import. Once you understand clearly the procedure for import, then while I am discussing the charging section or other types of duty related, when a particular duty will be levied, so all those you will be having a proper flow. Okay, these two are considered. Okay, this is considered. So you will be having a proper understanding only if you know the procedure for import. Okay, so let me discuss that. Any vessel or aircraft, which is carrying imported goods, a vessel or aircraft which is carrying imported goods, right, that shall be landed, such aircraft shall be landed or such vessel will be called for only at the customs port. You cannot stop wherever the place you want, just like, okay, here the location is quite good, I can stop here for a while and I can take photos, snaps, and then I'll be going to the port. Like that, the aircraft or vessel cannot do. Okay, if you're going on a car or bike, so what you do, like whenever you find a nice location or good location, you'll stop the vehicle for a while and then you click some photos and then again you'll be moving. But it's not the case for vessel and aircraft. The pilot or the master of the vessel cannot do the same thing, like, okay, here location is too good, okay, the port anyhow it's like another 20-30 kilometers, I'll stand by here for some time and then afterwards I'll go. That and all is not possible. So in vessel, aircraft coming from outside India carrying goods, imported goods shall be called for or landed only at the customs port. Now, one student might be asking like, sir, what if there is emergency situation? That time it is allowed, okay? So in any emergency situation, it can be land or called for in any place other than customs port also. But then also, immediately they need to inform it to the customs officer. If customs office is not nearby, at least to the local police station, they should inform. Okay. Then this person in charge. So here we are referring person in charge. So we should understand who is called person in charge. For that, first we should understand conveyance. Sir, conveyance is nothing but the mode of transport. Conveyance includes vessel, aircraft and vehicle. Conveyance includes what? Vessels, aircraft and vehicle. Okay, vessel, aircraft and vehicle. And vehicle means here, vehicle even includes train. Conveyance includes vessel, aircraft and vehicle. Vehicle even includes train. So these are the mode of transportation. Only these things only, right? Okay, vehicle means even trucks are also covered and even trains are also covered. These are only the modes of export. You cannot export goods by way of or import goods through bullock cart and all. It's not possible, right? That's why vessel, aircraft and vehicle. Then person in charge. For a vessel, it is like master of the ship. For a vessel is called as person in charge. For an aircraft, the person in charge will be commander or pilot in charge. For a train, it is conductor or guard. For any other vehicle, it is driver. So person in charge of a vessel is master of the ship. Person in charge of a aircraft is commander or pilot in charge. Person in charge of a train is conductor or guard. And for a vehicle, it is driver. So, okay, so this one is the person in charge. Sir, why a person needs to be mentioned as person in charge? Because under customs, either the vessel or aircraft which is coming to India and leaving India, that particular conveyance related certain formalities, certain filings, certain submissions has to be made by them. So to do all that, they should make one person responsible. So to make such one person responsible, that responsible person is only person in charge. So this person in charge is obligated, liable to file certain documents with the customs office when he is coming to India or when he is leaving India along with the conveyance. Okay. So now if you see here, person in charge. So this person in charge shall deliver what? He'll be delivering IGM. He'll be delivering what? IGM. What does it mean by IGM? IGM means Import General Manifest. This person in charge shall deliver Import General Manifest, that also electronically, before the arrival of the vessel or aircraft. Before or the arrival of such aircraft and vessel only, this person in charge shall file IGM. Now we are having a question. What is this IGM, sir? Full form is written, Import General Manifest. What will be there in this IGM? Sir, this IGM consists of the total list of goods which were being carried in that particular vessel or aircraft. And those list of goods also, like which would be imported into India, which goods will remain as it is in the ship, or which goods will be transshipped. I mean, they'll be unloaded in India port, but will be shifted to another ship and will be moved to some other different country. So the list of the details of all those goods will be mentioned, and such list is called as IGM, and such IGM has to be filed with the customs office before the arrival of the vessel or aircraft. Okay. However, if it is land route, then it can be filed within 12 hours from arrival also. Sea route or air route, IGM has to be filed before arrival. If it is land route, it can be filed even after arrival within 12 hours. Then, on receipt of IGM, once IGM is received, the proper officer will verify the IGM, whether these goods can be allowed to Indian port or not. Okay, so that verification will be made by the IGM. Once the proper officer verifies and then grants entry in words. On receipt of IGM, proper officer verifies and grant entry in word. Grant what? Entry in word. On receipt of import general manifest, proper officer verifies and grant entry in word. And grant entry in word. Hello, is it clear? Very simple, sir. Aircraft vessel coming from outside India shall not be called for or landed in any place other than customs station. First one. Second one, if you are a person in charge of vessel or aircraft, you are obligated, you are responsible to file an IGM. IGM means Import General Manifest, which consists of details of the goods which are being carried in that particular ship. Okay, such IGM has to be filed before the arrival of the vessel. In case of land route, it can be filed even after arrival, but within 12 hours. Once the person in charge file IGM, the customs officer will verify it and then grant entry in word. So to grant entry in words to a vessel, first what would have been done? IGM might have been filed. Hello? Okay, then since entry in word is granted, right, the ship will be entering into the port. The goods shall be unloaded only if those goods are mentioned in IGM. Okay, so if any goods you just hide it, you didn't mention in IGM, then those goods are not allowed to be unloaded in the customs station. To unload those goods into India, you need to mention them in the IGM as well. So goods shall be unloaded only if they are mentioned in IGM. And that also at the approved place. You cannot unload wherever you find place. Only if such place or area is designated to you, then you could unload there. That also under the supervision of customs officer on a working day during working hours. The unloading can be done what? Under the supervision of customs officer on a working day during a working hour. However, in certain ports, okay, now in certain ports it is allowed 24/7 clearance allowed by paying merchant overtime charges. In certain ports, 24/7 clearance is allowed. You can import goods anytime. I mean, the loading, unloading can be done 24/7, even after working hours also. But then you need to pay additional charges, which is called as merchant overtime charges. Merchant overtime charges you need to pay to the customs authorities. Then they'll be even supervising the unloading and loading even after working hours. Okay, then once goods are unloaded, they remain in the custody of custodian. Once goods are unloaded, they remain in the custody of whom? Custodian. Now the question is, who is this custodian? Who is this custodian? Sir, if you know Adani Ports, what is the business of the company Adani Ports? Certain major ports, government will be, if at all, initially if these are developed by government, or a new port may be developed directly by the private persons also. Okay, let's say this is India, right? Here somewhere in Andhra Pradesh, they need to develop a new port. Okay, prima facie in the initial days, these ports will be constructed, maintained, operated, developed, everything by the government. But now government thought like this is requires so much of money and government cannot spend so much. So this was given to a private person to operate, maintain, construct everything. Let's say Adani Ports. So now Adani Ports will do what? They will construct the port here. They will only operate the port. They will only maintain the port. The question is, sir, if I construct a bus stand, what money I will get, sir? What this fellow will get if we construct a shipyard, port, harbor? He will not get any money, right? Sir, in bus stand, for bus stand will it be any money? railway station will be getting any money, but understand, every train passing by there using railway station, right? The railway station platforms, right? So every train which comes and goes need to pay some fee to the railway station. Then railway station is getting money. Same way, use bus stand. Every bus, whichever comes into that particular bus station, needs to pay fees, because that's your place, guys. Okay, you are allowing that buses to come, and even the passengers will be available there. Okay, so then they need to pay certain fees. The same way here also, whichever the ship, aircraft, vessel comes there, need to pay certain fees to them. That's the revenue to them. Okay, so now we are saying like what? This port is owned, operated, maintained by this company, right? So this company is called as custodian. So once the goods are imported, they will be remain in the custody of custodian. Under the custody of Adani Ports Limited, that company. Okay. Now, any pilferage is happened. What does it mean by pilferage? Pilferage means theft in small quantities. You have imported some 1000 kgs. Out of that, if 1 kg, 2 kgs is theft, some small theft of 1 kg, 2 kgs is happened, that's called pilferage. If the whole 1000 kgs is lost, then that's not pilferage, sir. When the goods are lost in small quantities, petty items, then that is called as pilferage. So if any pilferage is happened within the customs area, for such pilferage, custodian is only responsible, because custodian is the owner of the port, or of the one who is maintaining the port. So you should have taken care properly. You should have provided proper security. Since it is his negligence, his mistake, he only has to bear the custom duty if any pilferage is happened to the extent of pilferage. Okay? Once goods are unloaded, they remain in the custody of custodian. For pilferage in port, custodian is only responsible then. The importer of goods, whoever the one importing goods, shall file bill of entry. Okay? If you have imported goods, you need to get your goods to your place, right? For that, you need to file bill of entry, that also online only, not manually, for clearance of goods. But under customs, sir, you have two options. One is like, you have imported goods. These imported goods, file bill of entry, pay tax, pay duties, file bill of entry first, then pay duties, then you can remove to your home. Sir, here home na, it doesn't mean literally home. You can take them to your office, factory, okay, or to your premises. That is called as home consumption. Home consumption means it doesn't mandatorily mean you should take those goods to your house. Okay? Then the other option is like, you can defer payment of tax. You need not to pay customs duty now. Why? Because you have imported bulk quantity, sir. All those goods are not needed to you immediately. So you can warehouse those goods. Once you warehouse those goods, the duty payment will be deferred. Whenever you remove the goods from warehouse, then only you need to pay customs duty. So imported goods, okay, these imported goods, you can even keep them in warehouse. You can keep them even in warehouse. So while keeping in warehouse also, you need to file a bill of entry. And then from warehouse, again you will be removing for home consumption. Okay? Again for removal also you will be filing here bill of entry. So if you see here, there are 3 bill of entries. One bill of entry is for direct home consumption. The second one is for warehousing. And the third one is like removing from warehouse. So total there are 3 different kinds of bill of entries. See, bill of entry for home consumption, bill of entry for warehousing, and bill of entry for removal from warehouse. And then this warehouse, sir, when you are keeping the goods in warehouse, you are not paying duties, but you are giving a promise to them saying like, now I will not pay duty, sir, because I am not taking these goods to my premises now. I'll keep them in the warehouse only. Trust me, I'll pay duty whenever I remove the goods from warehouse. That's what you are asking. Then customs officers also saying like, okay, we trust you. But one person or any of many importers, one person might do fraud na, cheating na. Why we need to bear that risk? So please execute a bond in favor of customs. Bond in favor of customs. I mean, let's say you need to pay some 5 lakhs as duty. So then for 5 lakhs, execute a bond stating like, I owe you 5 lakhs when I remove the goods without proper permission. So here bond has to be executed. Since you will be executing bond here, this is called in bond bill of entry. What? In bond bill of entry. When the goods are being removed from warehouse, whatever the bond you executed, that's no longer needed because you will be paying duties. Why again bond needs to be there with? The bond will be given back to you. So when you are exiting from warehouse, it's called ex bond bill of entry. Okay, so in bond bill of entry, when you are sending goods to warehouse, it's called what? In bond bill of entry. When you are removing goods from warehouse, it's called what? Ex bond bill of entry. Sending goods to warehouse, in bond bill of entry. Removing goods from warehouse, ex bond bill of entry. When you are sending goods, okay, in bond bill of entry, and here it is like ex bond bill of entry. Hello, is it clear? Okay. Bill of entry can be filed before arrival of conveyance. Here it's again after arrival. Bill of entry can be filed usually before arrival of the conveyance. Before the conveyance comes only, you need to file bill of entry. But you have time. Even after arrival also you could file. Before arrival, you cannot file 2 years, 3 years before only. Okay? Within 30 days before to the expected arrival of the vessel or aircraft. Within 30 days from expected date. Okay? Not beyond 30 days. Within 30 days of the expected date only you should file bill of entry prior to arrival. Post arrival you could file within 2 days. Within next day to the following day of arrival. If today it is there, then tomorrow by day after tomorrow. Tomorrow is the following day. And the next day to following day is like day after tomorrow. By the end of day after tomorrow, you have to file bill of entry. But if tomorrow is a holiday, then don't count tomorrow. Another 2 days will be there. Okay? Consider only working days. Then, once the goods are unloaded, bill of entry is filed. I mean, you need to file bill of entry within 30 days and you should clear the unloaded goods from the custodian either for warehousing, home consumption or for transshipment. Transshipment, moving goods to another place. Okay, post 30 days. I mean, if you don't clear goods within 30 days, then custodian will levy demurrage charges. Demurrage is a penalty for not clearing the goods within 30 days. Demurrage is like what? It's a penalty for not clearing the goods within the time. Okay, so let us quickly once again see, look at this point, sir, fastly. First point is what? The vessel aircraft coming to India shall only be landed or called for in the customs station. Then the person in charge of the conveyance shall file IGM. IGM means what? Import General Manifest. It consists of details of the goods which are being carried or loaded in that particular vessel or aircraft. That list has to be filed to the customs office before the arrival of the vessel. However, it is through land route, it can be filed even after arrival within 12 hours. Once such IGM is filed, proper officer verifies and then grant entry inward. Okay, once the entry inward is granted, the vessel will be coming into the port and the goods can be unloaded. Only such goods can be unloaded which were mentioned in the IGM. If any good is not mentioned in IGM, such good cannot be unloaded. Goods shall be unloaded only if mentioned in IGM. That also at approved place under the supervision of customs officer on a working day during working hours. However, after this modernization, after implementing so many trade facilitation measures, in certain ports, okay, in certain ports, 24/7 clearance is allowed by paying merchant overtime charges. Okay, then once goods are unloaded, they remain in the custody of whom? Custodian. If any pilferage means what? Small quantity theft. If any pilferage is happened, for that custodian is only responsible. Then Importer who has imported goods shall usually file bill of entry. The bill of entry is of three types: bill of entry for home consumption, bill of entry for warehousing, and bill of entry for removal from warehouse. The bill of entry for warehousing, you will be filing inbound bill of entry. If it is bill of entry for removal from warehouse, then you will be filing ex-bond bill of entry. Okay, bill of entry can be filed before the arrival or even after arrival. Before arrival, within 30 days from expected arrival date. After arrival, then it is within next day to the following day of arrival. While doing that, consider only working days. Okay, then within 13 days of unloading goods, within 30 days from unloading, goods has to be cleared for warehousing, home consumption, or for transshipment. Post 30 days, custodian will be levied demurrage charges. Okay, this is the process of import. So take a break of, the live will be continuing, sir. Take a break of just some 5 minutes and we'll again restart this session. If at all you guys are sleeping, wash your faces and again come back. A short break of 5 minutes. Okay. So let us continue with our discussion now. So what? We are into the charging section. Charging section means what? For any act, charging section gives the power to levy tax. It's the switch. Yes, there is power supply, but to turn the fan, you need to turn on the switch also, right? So charging section is something which is the switch, which acts like a switch. So it tells on happening of what it triggers. Customs duty has to be triggered. But to trigger customs duty, what should have happened? That will be mentioned in the charging section. So here if you see, what should have happened? Import or export of goods. Import or export of goods into India is the taxable event for levy of duty. Import or export of goods is the taxable event for levy of customs duty. So the triggering point is like import or export of goods into India is the taxable event for levy customs duty. And then the customs duty is levied as per the rates mentioned in Tariff Act. So charging section is very clear. To levy customs duty, what should have happened? Import or export. Then upper industries. This case law, sir, this case law helps us in deciding when the import is completed or when the import is started. Because import, when can we say like the import is made? Because I said like India means India includes Indian territorial waters, extends up to 12 nautical miles. Customs waters extends up to 200 nautical miles. So when it is to be treated as import, like when if the goods crosses customs waters, then it is importer. Or when the goods cross territorial waters, then it is importer. Or when the goods touch the land of India, then it is importer. When it would be considered as import. So that was explained in this particular case law. See, import is a process. It's not a single step activity. Okay, the Honorable Supreme Court itself has said like what? Import is a process. Import is a what? Process, which will commence when the goods cross territorial waters. Import is a process which will commence when the goods cross the territorial waters. So it starts there and continues till they become part of the mass of goods within the country. I mean, till they become part of normal goods. I mean, they need to cross even the customs barriers also, not just touching the land. They should become part of the normal goods. They should get mixed with the normal goods which are available in India. Then it is considered as import completed. Okay. So now, in this particular case, sir, it is a different one. So what happened in this particular different case means, sir, this is India, right? Okay. Here, this blue dotted line is there na, so this will treat it as like exclusive economic zone. So here there is a oil rig. Okay, this oil rig is within the Indian customs waters only. Here there is an oil rig. From there oil extraction is carried out. So there is an import of plant and machinery to this oil rig, plant and machinery and consumables to this oil rig. They didn't brought to India. I mean, they were not brought into Indian land, not even to the customs port. They were just directly this plant and machinery installed at this oil rig, and even these consumables are also used at this oil rig. They were not brought into the land of India. Okay, here itself they have been used. So now the question is whether these machines or these consumables which were consumed at the oil rig, will be considered as import. Okay, because these goods didn't touch the Indian land nor cross the Indian customs waters, whether this amounts to import or not. So look at this case law. Aben Lloyd Chilis Offshore Limited. Exclusive economic zones are deemed to be part of Indian territory. These exclusive economic zones are also what? Part of Indian territory. Therefore, the supply of spares, equipments to the oil rigs located in exclusive economic by a ship will attract import duty. So exclusive economic zones are deemed to be part of Indian territory. Therefore, the supply of spares, equipment to the oil rigs located in exclusive economic zone by a ship will also attract import duty. Okay, so supply of the spares equipments to the oil rigs will also what? Import only attracts import duty. Okay, so we understand import is a process. It starts when the goods crosses territorial waters and continues till the goods become the part of mass of goods in the country. Okay, and I have said a different case law which says like exclusive economic zones are also deemed to be part of Indian territory. Therefore, the spares, equipments to the oil rigs, okay, which were brought to the oil rigs by a ship which is located in exclusive economic zone is also has to be treated as import. Now, when customs duty is leviable, okay, import starts when? Import starts when the goods cross territorial waters, right? So if this is India, this is territorial waters, sir. This is territorial waters. Here, the goods are crossing. Goods cross territorial waters. Import has been begun. Then goods unloaded. Then here, the goods unloaded. And then bill of entry has been filed. Then what? A bill of entry is filed. And then finally goods clearing customs barrier. I mean going out from customs barrier. Clearing customs barrier. Customs barrier. Clearing customs barrier. So out of these four events, when the actual necessity to pay duty arises, the necessity to pay duty arises only when the goods are crossing customs barrier. Not crossing territorial waters is not the taxable event. Unloading is not the taxable event. Bill of entry filing is also not the taxable event. Only the day when you are removing goods from customs clearances, customs barriers, that is the taxable event. So you are responsible to pay tax only when you are clearing the goods from customs barrier, not just because those goods came into India. Goods came to India, you looked at those goods, these were already damaged. You felt like these goods are useless, they are not useful to you. So you left the goods there itself. You said like, okay, I'm relucting to take this time these goods, I'm relinquishing my title. You are giving away, you are foregoing your title, ownership of those goods. Then you are nowhere responsible to pay tax, right? So, but the goods are already imported, they came to India, but still you are not responsible to pay duty. So understand, the taxable event is not goods crossing territorial waters or unloading of goods or filing of bill of entry. It's the date on which the goods are clearing customs barrier, that is the taxable event. So date on which goods cross territorial waters, not a taxable event. Date on which goods were unloaded, not a taxable event. Date of filing of bill of entry, not a taxable event. Date on which goods crossing the customs barrier, okay, that is the taxable event. This is also important for MCQ, sir. What is the important event for taxability? What is the event for levying tax? Goods crossing the customs barriers. Goods crossing the customs barriers is the taxable event. Goods crossing the customs barrier is the taxable event. Okay. Types of duties. Types of duties. So now we are going into what? The types of duties. Types of duties. So we all know under customs, we call it as like customs duty. But the thing you should understand is like customs is not a single tax. There are bunch of taxes under customs. Okay, there are bunch of taxes, not a single tax. It's a group of somewhere like 6 to 8 different taxes are there. It doesn't mean on every import all these are applicable. On certain imports these are applicable, and on certain imports these are only few are applicable. Okay, but it's our duty to study, understand all those things, right? Okay, whether they are applicable or not, first we should know, right? Okay, so for that purpose, the duties can be classified into two types. The duties can be classified into how many types? Two types. What are those? Revenue duties, and the next one is protective duties. Duties can be classified into how many types? Two types. What are those? Revenue duties, and the next one is protective duties. Revenue duties and protective duties. Revenue duties, the intention itself is to generate revenue. If the levy revenue duties, the intention is to generate revenue only. Intention is to generate revenue. When the levy protective duty, the objective of protective duty is like not to generate revenue. Incidentally, yes, they may generate revenue. Sir, understand, traffic constables in the traffic department will levy fine on us if you are not wearing a helmet, when you are going on triple riding, when you are doing triple riding, or when you are going on a wrong way, or when you are driving bike after having some chilled water, okay, only water, okay. So after that, if you are driving, you think like you are going straight only, but it was going like, okay, like the way it wants. So in such cases, the traffic department, the traffic people will be levying some fine and penalty. So why such fine and penalty is levied? To generate revenue to the government. With that fines and penalties, how much revenue government will get? Very less only, right? Yes, but revenue, money is coming. But the intention is not to get money there. The intention is like to make sure you obey the traffic rules. You should comply with those conditions. Okay, so that's their main objective or agenda. So that's why the intention behind levying protective duties is not to generate revenue. But eventually, even without that also, certain revenue will be generated. But the intention or objective is not to generate revenue. Okay, whenever there is fine penalty, it's not like to generate revenue. It's like to discourage you from doing such act. Here also the same thing. It is levied with an intention to protect indigenous industry. I mean, when the other country goods are being imported in a excess quantity and they are being dumped into India with a low price, if it is allowed, then our domestic industry cannot survive. Let's say, for example, sir, considering our raw material availability, manpower, and other infrastructure facilities, for us to manufacture a mobile, minimum it is taking like 8,000. Now, there are mobiles from other countries which are being dumped into India for 4,000 only. If they allow to sell that 4,000 mobiles, eventually this Indian company cannot survive. So this Indian company will lose its existence. So it's completely we are relying on imports only. So to make sure our Indian industries will survive, we'll be levying protective duties, so that we'll make sure that imported good also will be similar to that of price of our domestic manufactured good, so that we could protect our indigenous industries. So protective duties are levied with an intention to protect indigenous industry. Okay, so with them also tax will come, money will come to government, but intention is not to earn that particular revenue. Their intention is to protect our indigenous local industries. Okay. So we can continue. So if you look at the types of duties, if you look at the types of duties, the duties are of two types mainly: protective duties and revenue duties. Protective duties, these duties are levied by with an intention to protect indigenous. These are levied with an intention to protect indigenous industry. What are the types of protective duties? Safeguard duty, anti-dumping duty, and the third one is like countervailing duty. These are levied with an intention to protect indigenous industry. What are those? Safeguard duty, anti-dumping duty, and then countervailing duty. Safeguard duty, anti-dumping duty, and then countervailing duty. Okay, these three. Then coming to revenue duties, what are those? BCD. The reason for levying BCD is like the major import or export. And then there is AIDC, Agriculture Infrastructure Development Cess. AIDC, Agriculture Infrastructure Development Cess. And then SWS, Social Welfare Surcharge. And then CVD under 3 subsection 1. This is called as countervailing duty, sir. Sir, here there is one countervailing duty, here there is another countervailing duty. This is under 3 subsection 1 CVD, which is equivalent of excise duty. Prior to introduction of GST, okay, are you able to understand? Prior to introduction of GST, there used to be excise duty equivalent levied on import of goods. So on levy of this particular countervailing duty is equivalent of excise duty. So but since now GST got subsumed, currently this CVD is applicable only on petroleum products, alcohol, and on tobacco. Only on this CVD is applicable. This CVD, countervailing duty under 3 subsection 1, is equivalent of excise duty. I mean, if the goods are manufactured, on them excise duty will be levied, right? Previously, when there is an import of goods, on them CVD used to be levied. But since CVD is subsumed into GST, only to the extent of petroleum products, alcohol for human consumption, and on tobacco, this CVD is still continuing. Then, special CVD, this is under 3 subsection 5. Sir, on an imported good, it's not just customs. There will be equivalent of excise duty will be levied, and equivalent of VAT will also be levied. Because on the local produced goods or manufactured goods, there will be both excise duty and VAT. The same equivalent of excise duty and VAT will be levied even on imported goods. So that is called special CVD. So this special CVD, equivalent of VAT, will be levied here. The maximum rate of special CVD is only 4%. Maximum of special CVD is like what? 4%. However, this is applicable currently only on petroleum products. So see, revenue duties, what are those? BCD, AIDC, SWS, CVD under 3 subsection 1. Majorly it's subsumed into GST only to the extent of petroleum products, alcohol, tobacco, it is still surviving. And even special CVD also, only with respect to petroleum products. Special CVD is what? Equivalent of VAT. However, maximum special CVD that can be levied is only 4%. Then IGST. Since imports are interstate, equivalent rate is leviable on domestic suppliers. Okay, IGST, and even GST compensation cess. Imports are also interstate, sir. That's why an import IGST will be levied, and GST compensation cess also, if they are luxury goods or demerit goods, on them compensation cess is also applicable. So these are the revenue duties. Look at them once again. What are those? BCD, AIDC, social welfare surcharge, CVD, I mean countervailing duty, special CVD, IGST, and then GST compensation cess. So these are the revenue duties: BCD, AIDC, CVD, special CVD, IGST and GST compensation cess. So you should consider the format also. Format, sir, it doesn't mean all these duties will come in each and every question. Quite a few will come and many will not be available in our exam question also or in the classroom discussion question also. But we'll understand the format first. Considering if all these are available in a particular sum, we'll see the format. Okay. Here particulars. Here we are taking what? Particulars. Here we are taking the value on which such a tax has to be levied and amount. First one, sir, will be starting with assessable value. Assessable value is the value on which customs duty has to be levied. How do we arrive assessable value? This we learn in valuation chapter. Okay, forget about assessable value because we learn in valuation chapter how do we arrive this assessable value and all. So if you arrive assessable value, then how tax will be computed only we are learning. How to arrive the taxable income or the taxable value will be learning in the valuation chapter. See, first thing you need to levy is BCD. If it is as a percentage, BCD first we should levy. What? As a percentage. On what it should be applied? On assessable value. BCD shall always be applied on what? Assessable value. Take that amount. Then AIDC. Here they mentioned AIDC, right? If at all AIDC is applicable, that also will be levied as a percentage only. And this AIDC also has to be levied on what? Assessable value only. BCD also has to be levied on assessable value. AIDC also has to be levied on what? Assessable value only. BCD as a percentage leviable on assessable value. AIDC as a percentage leviable on assessable value. Then SWS as a percentage, social welfare surcharge, is leviable on what? On the common total of BCD plus AIDC. SWS has to be levied on the common total of BCD plus AIDC. So on assessable value, what has to be levied? BCD has to be levied. Social welfare AIDC has to be levied. BCD first on assessable value. Even AIDC also has a percentage leviable on assessable value. Whereas social welfare surcharge is not leviable on assessable value. It's leviable on what? BCD and AIDC. Sir, for us to have a better understanding, let us take assessable value as 10 lakhs. 10 lakhs. BCD as 12%. How much? 10 lakhs into 12%. Now here it is 1,20,000. Then AIDC 10%. On what it has to be levied? Assessable value only. So it comes to 1 lakh. Now SWS what? SWS is also always 10% only, sir. By default SWS is 10%. On what? BCD plus AIDC. I mean 1 lakh plus 1,20,000. On 2,20,000 you need to levy SWS. So 2,20,000 into 10% now it comes to 22,000. 22,000. Okay. 1,20,000, 1 lakh and then 22,000. Then countervailing duty. If at all there is countervailing duty, and it will also be given as like percentage. That percentage will also be levied on assessable value. Okay, 10 lakhs into some percentage or something. Okay, countervailing duty also has a percentage leviable on what? Assessable value. Levy on assessable value. Then safeguard duty, anti-dumping duty. Safeguard duty and anti-dumping duty, those two we cannot levy straight away as a percentage. In that particular safeguard duty notification, anti-dumping duty notification, okay, in that particular safeguard duty notification, anti-dumping duty notification, they will be providing how it has to be levied. How it has to be levied. So on levy of this, okay, so first assessable value you should take, then BCD, then AIDC, then SWS, then you should take what? Protective duties. Protective duties now, countervailing duty, safeguard duty, anti-dumping duty. Okay, after that you should do what? Subtotal. You should do subtotal. And from that subtotal, again, CVD as a percentage, special CVD as a percentage. CVD means how much, sir? equivalent of excise duty. Special CVD is equivalent of VAT. Understand here, on what this CVD and special CVD has to be levied. Sir, after levying these two and after levying protective duties, you are doing a subtotal here. You are doing subtotal. On this subtotal, you should levy CVD, and on the same subtotal, sorry, not subtotal, for levying special CVD, see here, sir, for this subtotal, you should add even CVD. For this subtotal, you should even add, sorry, let us assume for the sake of example, we don't think like there are productive duties. Then how much will be the subtotal? 10 lakhs, 1 lakh 20, 1 lakh and 22,000. It would be 12 lakh 42,000, right? Subtotal. Now, if CVD as a percentage is 10%, then here it is 1,24,200. Now, on what this special CVD is leviable? Let us take 4%. 12,42,000 plus this 1,24,200. After doing this, we'll be getting total, right? On this subtotal, you should apply 4%. On this subtotal, you should apply 4%. Then again after CVD and special CVD, again do total. Now on this total, levy IGST and even compensation cess. On this total, after adding CVD and special CVD, you will be getting again a subtotal, right? On that subtotal, you should levy IGST as a percentage and GST compensation cess also as a percentage. Okay. So once again, sir, I want you to understand this format. I want you to remember this format. Okay. At least few important items. Okay. Let me tell you that one also. AADC will not come usually, sir. So forget about AADC. Then countervailing duty, this protective duties may come or may not. Okay, let us remember. This CVD, special CVD, no more, sir, because GST is there. That doesn't have much relevance. So in questions also we'll not find out. So straight away IGST and cess. So simple. Take assessable value. First levy BCD and on that levy social welfare surcharge. BCD, social welfare surcharge. Then check, are there any protective duties like countervailing duty, safeguard duty, anti-dumping duty? If any are there, then as per the particular notification, calculate the duty. Then do subtotal. Okay. For the assessable value, add BCD, SWS, and if any protective duties, you will be getting subtotal. On that subtotal, you should levy IGST, and on the same subtotal only, you should levy IGST compensation cess. Sir, you might be misunderstanding like cess means something which is leviable on tax. No. Compensation cess also has to be levied on the same subtotal on which GST is being levied. Okay. So, and again, out of these total tax calculations, to the extent of IGST and compensation cess paid, it can be availed as ITC also. Because when you are importing, you are purchasing. It is your inward supply. Importing now, you are buying. It's your inward supply. On your inward supply, the GST component you can avail as ITC na. So that's why even on import also, to the extent of GST, IGST and compensation cess, you can avail ITC. Okay. So first we'll be starting with what? BCD, Basic Customs Duty. BCD, Basic Customs Duty. Okay, out of this, first we are studying with BCD. Imported goods are leviable to BCD. Okay, on import goods, BCD has to be levied as per the rates mentioned in CETA. CETA means what? Customs Tariff Act. So from the rates mentioned in Customs Tariff Act, you can levy customs duty. As I said previously also, the customs duty rates are of two types. One is standard rate, the other one is preferential rate. One is what? Standard rate. The other one is preferential rate. Standard rate is applicable in the normal cases, whereas preferential rate is applicable when the goods are coming from a preferential area. Okay, to make sure or to give applicability to preferential rate, these four conditions has to be satisfied. Only if these four conditions are satisfied, then preferential rate is applicable. Only when these four conditions are satisfied, preferential rate is applicable. See, what are those 4 conditions? Import must be from a preferential area notified by government. Import shall be made from where? Preferential area. Preferential area na, not the country where your girlfriend lives or boyfriend lives. That is preferential for you. It's not for the whole country, right? So preferential area means the area which is notified, the country which is notified by government as preferential area. So import must be from a preferential area notified by government, and then goods should be produced or manufactured in that preferential area. Sir, let's say Japan is a preferential country for us. Okay, so if the import is from Japan to India, then only 8%. Otherwise, it is 16%. Now, what the other people are doing means, these China people, from China, they are sending goods to Japan, and from Japan again they are sending to get this lower rate benefit. Okay, that's not allowed. Goods should be produced and manufactured within the preferential area. It's not just they are coming from preferential area. They should be manufactured within the preferential area. And then it's your duty to ask for preferential rate. The customs officer will not think of it like, okay, these goods are coming from Japan. Okay, this fellow will be getting preferential rate. All this he'll not think and he'll not give the benefit to you. If preferential rate is needed, you should make a claim. Asking like, sir, my goods are coming from Japan. If you have doubt, go and verify also. But for me, preferential rate only applicable. Please provide me preferential rate only. Like that, the importer should ask. It's not the duty of customs people to provide you the preferential rate. Understand? The specific claim for preferential rate has to be made by, the specific claim for preferential rate has to be made by whom? Importer. Then, and then the origin of such goods can be determined. The origin can be determined as per the rules framed. Okay? It's not like origin, if you say they believe, if at all they have doubt and they want to check the origin, you could provide, and such origin they can provide, establish, like, yes, these goods are manufactured only in Japan. If such conditions, such criteria is met, then you have the option to avail preferential rate. Okay, so basic customs duty, imported goods are leviable to BCD as per the rates mentioned in CETA, Customs Tariff Act 1975. There are 2 rates. One is standard rate and the other one is preferential rate. To make applicable the preferential rate, certain conditions has to be satisfied. What are those? The import must be from a preferential area. Import must be from where? Preferential area. Notified by whom? Government. And the goods should be produced or manufactured within the preferential area. The goods should be produced or manufactured within the preferential area. And then a specific claim for preferential rate has to be made by importer, and then origin of such goods can be established as per the rules frame. If these 4 conditions are satisfied, then you can go for preferential rate. Then you should know the exchange rate first. Exchange rate. Why? Because in an import transactions, usually the amount will be mentioned or referred in foreign currency. To levy tax, first the assessable value has to be converted into Indian currency. Only after converting them into Indian currency, we can levy tax. So how or which rate has to be used to convert them into Indian value? Exchange rate. Sir, we are having 2 cases. One is like imported goods, they might be home consumed or they might kept for warehousing. So there is a difference in taking exchange rate as well as BCD rate when the goods are directly home consumed and when the goods are warehoused. When the goods are directly taken for home consumption, the exchange rate is like exchange rate given by CBIC. Who is this CBIC? Central Board of Indirect Taxes and Customs. You have to take the exchange rate which is given by CBIC only. In question he may say like RBI, CBIC, RBI exchange rate, SBI exchange rate. FEMA exchange rate, all those are irrelevant to you. Which exchange rate is relevant? Exchange rate given by CBIC on when? As on the date of submission of bill of entry. Imported goods, home consumption. Then take the rate given by CBIC as on the date of submission of bill of entry. As on the date of when? Submission of bill of entry. On the date of submission of bill of entry, what exchange rate is there? That exchange rate only you should consider on the date of submission of bill of entry. And then in case of warehousing, take the exchange rate as on the date of submission of bill of entry. But for warehousing, we know there are two bill of entries. One is in-bond bill of entry, and then while removing from warehouse, there is ex-bond bill of entry. So which exchange rate, which date exchange rate you should take? You should take the exchange rate as on the in-bond bill of entry. In-bond bill of entry. Sir, once again I am writing exchange rate, direct home consumption, here it is warehousing. Given by whom? CBIC. Here also given by whom? CBIC. On which day? With respect to home consumption, there will be only one bill of entry. So no confusion. On the date of bill of entry. Date of bill of entry. Here also bill of entry only. But we know, like in case of warehousing, there will be two bill of entries. One is at the time of taking goods into warehouse. One is at the time of removing the goods from warehouse. So you should take the CBIC exchange rate as on the date of in-bond bill of entry. In-bond bill of entry. This is for what? Exchange rate. Home consumption, date of bill of entry. Warehousing, date of in-bond bill of entry. Clear? Now, BCD rate. BCD rate. With respect to home consumption, you should check two. One is bill of entry. Bill of entry, date of submission of bill of entry. And the second one is entry inwards. So what is entry inwards? You should not forget this much faster. In import process, I have said, the person in charge of a conveyance will be filing IGM. Once that IGM is filed, customs office will verify that IGM and then grants entry inwards to that particular vessel or aircraft. So that entry inwards or bill of entry, whichever is latter. Sir, be very clear, because many provisions it would be earlier, but here it is latter. Bill of entry or entry inwards, whichever is latter. Bill of entry or entry inwards, whichever is latter. Very important are these two. Many times the questions being asked on this point, and even after repeating it so many times, students will do mistake. If I look at a student doing mistake at this point, even after me revising so many times and telling in the class also, this is the area where many are doing mistake. But still, if you doing mistake there only now, it's something like negligence. Okay, so it usually make me feel frustrated if you do mistake in this area. Okay, you cannot afford to do a mistake here. Okay, so with respect to home consumption, BCD rate, you should take what? Entry inward or bill of entry, whichever is latter. Exchange rate for home consumption as on the date of bill of entry. Now, what you guys do means, for exchange rate also, you will do whichever is latter. For exchange rate, you should only consider bill of entry. For BCD rate, you should take whichever is latter. Okay, then, if the imported goods are sent for warehousing, then date of presentation of bill of entry for home consumption. Date of presentation of bill of entry for home consumption, which is ex-bond bill of entry. So for warehousing, simple. Okay, don't. This is the warehousing. While taking goods into warehouse, it is called in-bond. While bringing the goods from warehouse, it's called ex-bond. With respect to in-bond bill of entry, you should take it for what? Exchange rate. Whereas ex-bond is relevant for what? BCD rate. In-bond is relevant for exchange rate. whereas X bond is relevant for what? BCD rate. BCD rate. Okay. Now, let us complete the procedure for exports also. Then we'll wind up for today. Procedure for exports and BCD and exchange rate for export. So then the balance we can complete in the next class. Procedure for export. What is the procedure for export? The exporter, whoever is willing to export goods, is required to present electronically to the proper officer a shipping bill in case of vessel or aircraft, or a bill of export in case of vehicle. You are a person who want to export goods. Then first you should tell to the customs office, these so and so goods I'm going to export through aircraft or through vessel or through truck or conveyance. So that you need to mention. So based on the mode of conveyance you are using, the form will differ. Okay, in case of aircraft or shipping vessel, you need to present it in shipping bill. Whereas in case of land route, it is bill of export. It has to be presented, that also electronically, I mean online only. Okay. Then the proper officer will verify the bill of export or shipping bill you presented. And once he is satisfied, okay, these goods are not prohibited. I mean not prohibited, those goods are allowed to export. There is no restriction, bar or prohibitions on them. So he'll verify that and check if any export duties is applicable. So remember, on majority exports, there is no duties. But again, the customs officer will check whether export duty is applicable or not. If applicable, whether it is paid or not, then he will be permitting the clearance by way of let export order. The permission the customs officer gives to allow the goods export is called as let export order. The permission the customs officer gives to allow the goods export is called as let export order. Then the person in charge of the conveyance, okay, the person in charge of the conveyance must have got entry inwards. Sir, I want to load my goods in a particular vessel name Bhishma. Okay, the vessel name is Bhishma. So now that vessel Bhishma related person in charge should get an entry outwards first. Only when he gets entry outwards, then I am permitted to load my goods into that particular vessel. Okay, so goods shall be permitted to be loaded into conveyors unless a bill of export shipping bill duly passed by the proper officer is submitted to person in charge. Unless until me being an exporter gets that bill of export or shipping bill and it is submitted to person in charge, I cannot load my goods into vessel. I mean person in charge will not permit me to load the goods into vessel. Then post loading, person in charge shall submit export manifest. Okay, post loading, the person in charge has to do what? EGM. Sir, in the case of import, it is IGM. Here it is EGM. EGM means what? Export General Manifest. What does this EGM consist? This EGM consists of all the goods which are being loaded into the ship when the ship is about to leave. So this also has to be filed electronically. Once this EGM also filed, then proper officer will verify and gives a written order. Okay. Only when the written order is given, then the ship is allowed to depart. Unless that written order is not given by the proper officer, ship is not permitted to depart. Okay, let me again give you a quick understanding. Procedure for export. I'm an exporter. I want to export my goods. So what I have to do? I need to provide a form to the customs office stating like these are the goods and this is the value I want to export. Okay, how I will be communicating with the customs office? Through a form. That form is bill of export. When the goods are being exported through land route. If I am intending to export goods through airways or sea route, then I'll be presenting that form in shipping bill. So I need to file, being an exporter, I need to file bill of export or shipping bill. Once I file that, proper officer will verify my bill of export or shipping bill. And then he'll make sure himself that the goods which I am exporting are not prohibited goods. First one. Okay, not a prohibited goods only. Then he'll check whether on those goods if any customs duty applicable. If applicable, whether it is paid or not. If he thinks, if he checks, I mean after checking all these things, if he is satisfied, then he'll give me a let export order. What? Let export order. Now, my part done. I have to load these goods into a ship. That ship related one. I said like Bhishma is the vessel. That person in charge of such vessel, has to apply to the customs office, I mean has to provide entry, has to apply for entry outwards. He should get what? Entry outwards, which intends to start loading must have got entry outwards. Then he got entry outwards, I got let export order. Now I'll be taking goods to the conveyance. That conveyance guy, person in charge, will allow to load my goods into that particular conveyance only if I got the bill of export or shipping bill. Then post loading, person in charge shall submit export manifest electronically to the proper officer. Only, okay, once this EGM is provided, then customs office will verify and grant him a written order. Only with this written order, the ship is allowed or permitted to leave. Allowed or permitted to leave. Then BCD and exchange rate applicable on exports. The BCD rate and exchange rate applicable on export. On export, the BCD rate applicable is like rate as on the date of let export order. Here if you see, let export order will be given by the customs officer, right? So on the let export order, whatever is the BCD rate applicable, that BCD rate has to be taken. Whereas for exchange rate, it is the rate as on the date of submission of shipping bill. First you will present shipping bill. Post shipping bill, okay, first you will present shipping bill. Post shipping bill, they'll verify it and they'll be granting let export order. So let export order is relevant for BCD rate. Shipping bill is relevant for exchange rate. Let export order is relevant for BCD rate. Whereas shipping bill, submission of shipping bill is relevant for exchange rate. Okay? I hope I have made clear till the point which we have discussed. So in the next class, I mean tomorrow's class, we'll be discussing the balance part. The balance part little easy only, sir. And in first chapter, we don't have much questions also. Whatever the questions we have in workbook, that we'll solve. Okay?